Are small cars going to see a rise again in demand? Well, we'll discuss that and a lot more, especially in the context of EVs as well as hybrids on the show this morning. Also on the show, we'll get your view on why Indian students are ditching the United States, instead opting for Germany as a preferred destination for higher education. And finally, we'll also get you an update on Indian stock markets and the critical data that investors await this week, especially with respect to inflation. That and more on this edition of Morning Brief at 9. This is Morning Brief at 9 this Monday morning. Let's look at all the headlines that we're tracking for you. Automakers including Tata Motors, Mahindra and Mahindra, Renault and Hyundai India slash vehicle prices up to 4.65 lakh rupees following new GST rates, boosting sales and making cars more affordable ahead of the festive season. Germany overtakes the United States as top choice for Indian students. Applications to American universities drop 13% and Canada's share also nearly halves. The US Department of State mandates Indians to apply for student, work and visitor visas only from India, ending overseas application flexibility and adding to long wait times. US President Donald Trump signals tougher Russia sanctions, hints at further action in Phase 2 and Phase 3. United States Treasury Secretary Scott Bessent warns stronger sanctions and secondary tariffs on Russian oil buyers, including India, could collapse Moscow's economy and force Putin to negotiate. India and Israel to sign bilateral investment treaty during Israeli Finance Minister Bezalel Smotrich's visit, paving the way for future free trade agreement and enhanced trade, investment and fintech collaboration. Finance Minister Nirmala Sitharaman says government is closely monitoring the rupee amid record lows against the US dollar, stresses global dollar strength and highlights GST rate cuts from September 22nd. And at the SCO Trade Ministers meeting in Russia, India urges members against weaponizing export measures, calls for transparent trade practices, greater market access, coordinated action to address deficits, support MSMEs and promote fair, inclusive and innovation-led digital economy. In market news, foreign investors pulled out as much as 12,250 crore rupees for Indian equities in the first week of September, weighed down by a stronger dollar, US tariff concerns and geopolitical tensions. Let's start with the top story we're tracking for you this morning. Mahindra and Mahindra, Hyundai, Skoda, Tata Motors and many other car makers have slashed car prices already ahead of the September 22nd GST rate cuts to be effective. In fact, these discounts or revised prices, as one would call it, came into effect from September 6th itself. Now, Hyundai says that cars would get cheaper by as much as 2.4 lakh rupees. Mahindra's Scorpio N price has been slashed by 1.45 lakh rupees. Meanwhile, Toyota Fortuner price has been cut by as much as 3.5 lakh rupees. Tata Motors says that it is going to cut prices ranging from 30,000 rupees to as much as 4,65,000 rupees. Well, market leader Maruti Suzuki is yet to announce price cuts, and those decisions are likely to come today, if not in a few days from now. Meanwhile, luxury brands like Mercedes-Benz and BMW have also cut prices as much as 11 lakh rupees on some models. Now, what really happened during this entire GST Council meet and the rate decisions that came out was that while ICE engines as well as hybrids have been given this tax incentive, the GST on electric vehicles continues to stay at 5%. So this means the customer math on electric vehicles versus ICE now changes potentially in favor of ICE and hybrid, even though the GST on electric vehicles stays at just 5% compared to 18% on ICE and hybrids. So does this GST offer mixed signals to the future of mobility? Let's discuss that first with our two special guests joining us this morning. We've got Sarash Damani, the CFO of FADA, joining us this morning. We also have Mr. Dilip Chenoy, the former Director General of SIAM, on the show. Mr. Chenoy, good morning. Let me start by asking you first. The GST Council has decided to cut rates on all internal combustion engines as well as hybrids, both in petrol and diesel categories. And even the higher range, 40%, now don't come with cess, in effect making them cheaper. And that is what we are seeing translate to the sticker prices of cars. But electric vehicles stay more or less constant. Now, does this change the math equation for consumers looking at buying new cars and potentially looking now at hybrids as well as the traditional ICE engines being more lucrative as compared to no further incentive on electric vehicles?
So thank you, Karthik. And, I think it's very interesting that you actually, in retrospect, put this question. But just, on the eve of the GST Council meeting, the question was whether even electric vehicles would go up to 18%.
That's right, sir.
Right? So that they were retained at 5% is a big plus point. The second is, if you look at the total cost of ownership, right, and you look at, there are two things. One, the total cost of the acquisition cost, another, the daily running cost.
Yeah.
Now, given the comparison, even with a CNG or petrol or a hybrid vehicle, the cost of running an electric vehicle is far lower than an ICE vehicle in terms of, rupees per kilometer, right? So still that attractiveness is there. Yes, those who are looking at an option of EV and versus a low end or other equivalent ICE vehicle might find that, in the short term and as you go forward, a very interesting option, because the total cost of ownership is kind of coming down for the non-electric vehicles, but remain constant for electric vehicles. So in that way, at the entry level, you might actually find this happening. But if you look at the more luxury segment, there the percentage of EVs sold as a share of the total vehicles sold is actually increasing. So there is something else happening in the luxury end of the segment, ICE versus hybrids versus EVs versus what is happening in the entry and the mid-level segment. The EV may look unattractive in the short run, but if you look at the long-term stability of EVs and looking at firms, looking at battery leasing and other such options, I think the future is bright for the EVs.
All right, future is bright for the EVs, comes a word from Mr. Chenoy. But Mr. Damani, let me bring you into this discussion and help us understand what happens to auto companies from here on. In your opinion, do you think this demand by way of reduced prices is going to be short-lived, given that it comes right on the heels of India getting into festive season? So this Diwali until New Year, do you believe that that the demand is going to saturate in the next few months, or is this going to lead to a completely evolved competitive landscape where there are going to be more players returning to India or looking at coming to India, given the fact that now the competitive landscape with respect to tax at least is more lucrative for people to buy more cars?
Yeah, first of all, good morning and thank you for inviting me to your show. I think this is the start of, as you call in the stock market, it's a great bull run for the auto industry.
All right.
And you see that most of the companies have now started reducing prices much before the 22nd September date, when the GST rates come down to 18% and 40%. So what companies are now trying to do is to lure customers and to get them in the showroom even before the GST rate cut happens, by reducing the prices as much as possible so that it is, in tandem with the reduction of prices from 22nd. So this is number one. Why we are doing so, including dealers and OEMs, is if a customer buys or makes a decision right now, he'll be able to get the vehicle of his choice, if his variant, his color, on time during the auspicious period of Navaratri on a specific day, which he is looking out for.
Right.
Because if on 22nd he comes and then books the vehicle, he may not be able to get the vehicle
Right.
on the auspicious day and time. Now,
All
this
right.
was on the short term. In the mid to long term, I think this is a great reform which has happened. It's a watershed moment for the entire country.
Right.
And with this reduction, especially in the entry level bike two-wheeler segment or the entry level car segment, GST rate for specifically for entry level cars has come down from 29% to 18% now, which is a flat 11% reduction. And in the two-wheelers from 28 to 18, which is 10% reduction. This is something what FADA has been requesting the government since last 3 odd years.
That's right.
This segment was actually not picking up because of multiple reasons: the emission norm changes, the kind of road safety norms which were coming, which kept coming in from time to time. It always increased the prices of vehicle. But now with this reduction, I think the biggest gainer in this in the entire automotive industry and all in commanding all the segments will be the entry level category, which will start seeing a good run from now onwards.
Right.
And if you see the Ganpati and Onam, which has just gone by,
Yeah.
and just by mere announcement at that point of time, we even didn't know what kind of reduction will happen.
Right.
We saw customers coming in, making good inquiries. There was extremely healthy footfall in the market, in the showroom. The only challenge was conversions were not taking place because they were all in anticipation of a reduced GST rate. But as we see right now, demand is extremely high, and the festive season, the 42 days festive season, which begins on first day of Navaratri till 10 days post Dhanteras. This will be the litmus test, and I'm sure the auto industry will successfully clear this litmus test. And going forward, we have year-end sale also coming in December.
Right.
So they will be plus December. So that is going to be an absolutely great run for the industry.
Right,
which we
Mr.
will-
Damani, my question really is that while this festive season, of course, is understandable, there is likely to be not just passing, but passing with flying colors when it comes to the litmus test you're talking about. But what happens post the New Year discounts also going away? So do you, in your opinion, do you feel that it's not just going to be this 42 days, it's going to be maybe as much as about 90 odd days, but beyond that, it's going to be difficult for the demand to sustain?
I don't think so that it will be difficult for demand to sustain, because this booster, or as we call it, the Sanjeevani Booty,
Yeah.
will add as a booster for the Indian consumers. We also
Alright.
need to understand that government has already announced income tax, which is free until 12 lakh rupees, which means there is more disposable income with the public. Plus, when they come out in the market, they'll be spending less on vehicles. So that discretionary buying cycle will actually go up, and this will create a momentum in the industry, so that we see not only in the festive but New Year, but going forward also demand will sustain for times to come.
All right, Mr. Chinoy, I wanted to ask you about the affordable, the entry-level hatchbacks, but that has already been answered by Mr. Damani. So now I want to flip it and ask you about luxury cars. And luxury cars, by virtue of, the base price only being so high, so any lower tax on that is resulting in much bigger absolute sums of savings for consumers. So discounts as much as 11 lakh rupees for Mercedes-Benz, a few models, similar numbers coming in from BMW, etc. as well. So do you think those customers who are sitting on the cusp, who can afford, the beyond 4-meter kind of cars, are they going to now pivot to the luxury cars? And are these brands, especially the German ones, really going to make a killing in the Indian market from here on?
So I think, Karthik, there are three things which are working as we speak. The first is, it was just mentioned that there has been an income tax rejig, right? And under the new income tax scheme, you actually have marginally little more money in your hands. The second thing which is happening, the inflation has been kept very low. So inflation is in check. So, there seems to be more affordable, disposable income in the hands of customers.
Yeah.
The third is the GST cut. The GST cut has got multiple impact. Not only does it make the cars cheaper, but given that GST has been cut on daily necessities and households and all of that. So there is going to be a little more money in the hands of customers, and especially the high-end customers. So there are a few percentage of buyers who are aspiring to go there but were at the margin, right? Now that margin has significantly increased because of, one, the income tax, two, the low inflation, and three, the GST cuts across the board. So you will see at least the total addressable market for that segment increasing dramatically over the next few months. And therefore, the conversion rates, if they happen, then you will see a lot, you'll see increase in sales there. But like I mentioned, that segment is also very conscious. So, you might actually see also, a tussle between EV sales in that segment and the ICE vehicles and the hybrid segment in that thing. So you will see, across the board increase in sales from entry level to higher luxury and vehicles over the next few months.
All right.
And just to add to what Sarash said,
sure,
that you mentioned New Year discounts and we talked about the festive discounts, right?
Yeah.
But this whole rejigging of the GST gives the leeway to the OEs to actually do some innovative discounting models in a period of difficult times of sales. So you will see this space getting a lot more competitive. You will see all of them offering lower price points to customers to increase sales. So I think it's a big positive for the auto industry and for the country as a whole.
Right. So the next obvious question, Mr. Chinoy, therefore, is that since this competitive landscape is becoming even more aggressive and since the tax has been simplified, do you see the entry of more global brands coming into India now that there is a much bigger tax incentive for them to sell to Indians? So just to put it in perspective, the CEO of Volkswagen just announced yesterday that it is looking at India and could potentially be eyeing India to bring in a small electric vehicle into the country. Now, can we also at this point expect other brands? See, we've seen the VinFast with the VX17 now already announced and launched in India. But can we see other brands, let's say a Fiat and a Ford and a GM maker come back into India?
So, those decisions will be being discussed in boardrooms yet. Some have been early off the, the blocks, and they have announced their entry into India. But you'll see existing players also looking at different models because, the way the GST is structured is engine size and also length, right? So every manufacturer here would look at how they could get a vehicle at different price points. Some of the manufacturers have not introduced models very recently and have lost market share. So they will be looking at a different perspective. Others who are not present in certain segments, like you mentioned, Volkswagen and entry-level EVs, they will look at this. And others, even the price of imported cars will actually reduce because of the GST cut, because there is an additional duty which is to offset this, but that will actually enable and make it interesting for the import segments and test consumer marketing here. But yes, you will see more vehicles being introduced by existing players. Whether the players who left India come back, that's a different question. It's a long-term kind of situation.
Right. Well, let's leave it at that this morning. Mr. Dabani, Mr. Chinoy, thank you so much. Pleasure having you here with us on News9 to put this very big development and a continuing story into perspective for all our viewers. Thank you so much for your time. And with that, we will slip into a very short break, but markets have just opened. It's a gap up opening, but a lot of data awaited this week, including India's inflation as well as economy data from the United States. We'll put all of that into perspective with Rohit Srivastava, who's joining us on the other side of the break.
एसोसिएट स्पॉन्सर एंकर टूथपेस्ट, नए जमाने की नई सुरक्षा।
ब्यूटीफुल 18th सेंचुरी और अभी तक चल रही है।
ज्यादा नहीं चलेगी।
कुछ कहा?
प्रोमिनेंस नहीं,
प्रोमिनेंस।
वाओ, ओरिजिनल।
या स्पेन से लाए थे।
वहीं छोड़ा थे। प्रोमिनेंस नहीं है ना?
प्रोमिनेंस?
मैं कहना चाह रहा था कि प्रोमिनेंस नहीं है।
प्रोमिनेंस मतलब
Prominence windows. इसमें है highest weather resistance और घर को रखे safe from termites, seepage, dust and noise. Prominence for the world you deserve.
Papa, let's go to the happy birthday, Duda. I love you. Go, Duda, go. I love my Duda. I love my Duda.
Skoda.
The power of Digi-Alkaline from Nippo Thor.
ट्रस्टेड लॉयर शर्मा जी ने अपने दीवारों पर जेके मैक्स पेंट्स क्या लगवाया? अजीब अजीब बहाने लेकर आने लगे पड़ोसी उनका घर देखने।
हाय शर्मा जी, एक रील बना लूं उस ब्यूटीफुल सी वॉल के पास।
गलती से ना टोमेटो ऐप पे आपका एड्रेस डाल दिया, बस खाना आता ही होगा।
तुम भी टेस्ट कर सकते हो और हम तो खा चुके हैं।
मुझे गर्मा गर्म पकौड़े आपके लिए।
ऑनलाइन इंटरव्यू अंदर कर लूं प्लीज।
जेके मैक्स पेंट्स, खुशियों के रंग।
Breaking news: major disruption is expected this week.
Yes, disruption confirmed. That's me. Relax, no scams, no scams. Just my brand new show, News Caustic with Cyrus.
Welcome back. You're watching News 9. This is Morning Brief at 9. Let's bring you all the action from the Lal Street. Markets have opened just a few minutes ago and it seems like a gap up opening. Both Sensex and Nifty 50 are up about 1/4 percentage point or so, but Sensex still below that 81,000 level and Nifty 50 holding below the 25,000 levels, albeit just a few hundred points or so before that cut could be made. Let's look at the Nifty 50 heat map and try and see which are the sectors where we are seeing some action unfold this morning. In fact, it seems to be the auto sector which continues to be the toast of the town. Mahindra and Mahindra is up about 1.5% or so in trade this morning. Tata Motors is up about 2.25% or so. This comes from the fact that these automakers have announced price cuts to their cars. But Maruti Suzuki, the market leader, yet to announce any rate decision or any slash in its prices in the offering for its customers, and that stock is reeling under a little bit of pain, down about 1/5 percentage point or so in trade this morning. Beyond the auto sector, it seems more or less a mixed bag this morning. IT sector is almost flat, barring Wipro, which is up about 0.5 percentage point or so. Even the banking side and the finance stocks are a little mixed in their signals this morning, while HDFC Bank, ICICI Bank are both opening with a gap up this morning. You've got Kotak Mahindra Bank, SBI Life and a few others reeling in a little bit of red. In fact, even on the FMCG side, no real trend. HUL is absolutely flat. ITC is incidentally up about 1/4 percentage point, but Nestle is down about 3/4 percentage point. Well, a lot of data expected this week, especially from India as well as the United States. So let's put all that into perspective. Rohit Srivastava, the founder and market strategist at IndiaCharts.com, joins us this morning. Rohit, good morning. First up, your view on the general outlook this Monday morning. It seems like a mixed bag, barring auto sector, of course, which is seeing some healthy gains this morning.
Yeah, thank you for having me at the start of the week. And what we are really looking at is a market that is trying to come back from some of the worst negative sentiment that we have seen in quite a while.
Right.
But the good news here is that broadly, both the Nifty and Bank Nifty have held certain levels, repeatedly. For example, the Nifty itself has held 24,500 twice in the month of August. So that becomes a very important support from where it is going to try and attempt to build an upside move. Very similarly for Bank Nifty, I would put that level at 53,500. I think these are important watch points on the downside, from where the market will attempt to move higher as we continue from here, because a lot of the negatives, especially those related to tariffs, etc., seem to be discounted. And what we are really looking at is how measures from the government will help this move forward. And apart from that, what happens on the interest rate cycle, not just in the US, but in India as well. So I think a combination of these things do create room for a positive outcome, as we move from September into October. And that's what we should be, looking out for. It may look a little slow right now. It's possible that the momentum picks up slowly, but if these levels hold, I think the risk reward is favorable to the bullish outcome.
All right. You did mention the interest rates, and of course that is closely linked with inflation. And in fact, India's own inflation print for the month of August is expected to be released on September 12th. Meanwhile, we also are expecting more data coming in from the US, both on inflation as well as consumer sentiment. So that is something which would be awaited. But on tariffs, and since you mentioned that, Rohit, do you see some mixed signals from Donald Trump and his administration, especially at a time when over the weekend we saw a positive tweet from Donald Trump and a reciprocal sort of reply from Prime Minister Modi, and then again we are seeing mixed signals on secondary tariffs with respect to Russian imported oil in India, and phase 2 and phase 3 being discussed on those sanctions as well. So do you see some sort of mixed signals, or is it just Donald Trump being Donald Trump?
Yeah, that's a pretty tough call to take, because there's often a difference between what he says and what he does, and we don't want to read too much into it. But we'll go by what has happened so far. If at all something changes, I hope it will be more specific, which means that if he wants to target oil and not India as a whole, then probably the entire tariff structure should change in that direction. But once we've reached this point where, tariffs are 50% and, orders have come to a standstill for a lot of exporters in the months ahead, things can only get better. I don't think they can get worse from here. That is how we'll have to think about it. And so, yeah, not to read too much into what they're saying right now. Wait for an actual outcome. And like I said, it should probably be a better outcome than what it is.
And I want to specifically also talk about data which is coming from FIIs as well as DIIs. And now we've seen in the first week of September, almost 12,500 crore rupees worth of equities have been dished by FIIs. On Friday alone, we saw as much as 1,300 crore rupees worth of FIIs selling, but DIIs more than compensating 1,800 odd crore rupees bought on Friday alone. So do you think this is still going to be largely a domestic sentiment driven rally rather than one where we have a lot of dependence on foreign players?
Yeah, that's an important play. Since 2015 that we put LTCG on foreign investors, I've been of the opinion that has significantly slowed down global flows into India. We have seen them come in waves, but we haven't seen it happen like it used to be prior to LTCG. Because back then it used to be mostly every month is positive. You used to have a few negative months only if you had a significant bear market. Right. Now you get many positive and negative months every year, and then we start questioning how FIs are really looking at India. So tax plays a very, very important role when it comes to global asset allocation, not just that you're a growth, nation. So I think that will remain an issue. It's not, the only thing we can look for is that when markets do improve, you'll probably see reduced selling from FIIs. Right. But at this point of time, you might still see continuation of these negative numbers. But what we really study from a market sentiment standpoint, we look at the long short positioning that the foreign investors are doing, and domestic institutions now also, since they're significant, having in the index futures positioning. Right. And that is now at the second highest on record. So this is the second highest short position that FIs have built up compared to what they had done in February. Right. And days after they did that in February, in early March, we ended up getting a meaningful bottom. So we are at a very significant, similar reading that we are getting right now from their positioning, which is there's a lot of short. Now, what does that really mean is that, if you get even the slightest positive news flow, coming into the market, then you start seeing some amount of short covering, and that also helps push up the market. So it simply reflects the negative sentiment and hedging that they have done, considering the risk. But when your hedges are at a maximum, then only it can reduce from there. That's the main point.
So do you think the next step in tax reforms now has to be this LTCG and STCG, because the government has gone ahead, simplified and given a lot of incentive to the middle class by way of the direct income tax, and then of course we've seen the GST reforms as well. So do you think next on the government's list for must do is this LTCG, especially when it comes to equity trading?
So I don't think they'll change it on the domestic front. We had a zero tax regime for long-term investing for very, very long. And once they have changed that, I don't think they're going to go back on that for domestic investors. The real incentive is whether you want to provide a differential rate to foreign investors to ease the pressure on the currency front. Because you see, the biggest hit that India is taking right now because of the US tariffs is essentially the currency, because our current account deficit moves by more than half a percentage points, and then immediately means that you're going to need more dollars to buy the imports that you're really doing. And you can see the USD are already almost back to the previous all-time high. So it's possible that it continues to slip if there is no other policy change from the US side. Now, the only way that we've been managing that over a long period of time has been either the indirect flows that we get from a lot of Indians that work abroad. That is what we call as invisibles, and the second has been FPI flows, right? They have been the biggest balancer historically for the money that we have on our account. So that is the one place, if you really want to attract foreign money and get it back into what we call as the highest growing nation in terms of GDP growth in the world, I think it will be if we provide some kind of tax concession to foreign portfolio flows.
All right, so some tax concession to foreign portfolio players. But what I'm looking at the charts this morning, Rohit, and let's come back to action from the Wall Street this morning, is the FMCG space. And that seems to be a little negative this morning, given the fact that you have Nestle, which is down about 0.7%, Tata Consumers, HUL both down about 0.2% or so. ITC, of course, we understand there is unlikely to be too much negative in terms of its sales of tobacco products, and that is keeping the stock ticking. But beyond that, you're seeing the rest of the FMCG pack slide under some pressure this morning. Is there something that's going on, or is this just an anticipation of the inflation data and maybe some profit booking on the rise that we saw last week?
You see, if you've discussed the topic of the sector over a period of time, you'll find that FMCG has been an extremely overvalued segment. The only time that it gets some amount of demand is as a defensive bet. So when markets are weak, people don't know where to put their money, you'll find that the FMCG sector actually outperforms. And that's sort of what it has done on a 6-8 month basis compared to the Nifty. But moment you see markets improve, you see it pick up, then you will find that there is some amount of selling that again comes back to the segment, because people are reallocating capital away from defensive to areas where growth can show up. So that is why, if I take a slightly longer term view, like 1 to 2 years, I would find other areas to invest rather than FMCG. FMCG just plays a good role during difficult periods in the market.
All right. And finally, I want to talk about gold as well, Rohit, before I let you go. And gold, of course, the expectation was that come Diwali, the prices will be in the range of about 1,08,000 rupees per 10 grams or so. But guess what? Just last week, we touched another lifetime high of 1,07,740. Now, where does one expect gold to go from here, given the fact that, of course, this is festive season, and also the fact that central banks, not just RBI, but central banks around the world, are stockpiling more gold than ever before? So where do you think the gold rally to go? And given the prices that we are seeing right now, should there be a change in the asset allocation formula, and should people hold on to more gold?
Yeah, so there are a couple of things to keep in mind on gold. One is that, are you holding it for a long-term, investment, or are you simply trading on it? So from a trade perspective, we are in very late stages of the current move that probably started in 2022, 23. And what I mean by that is that it's getting very overbought. Even when we look at a monthly chart, the RSI readings hitting 89, 90 are very, very high. So that creates room for a correction in gold prices down the line. It may not be tomorrow morning, but somewhere 1 or 2 or 3 weeks down the line, you might see that we finally did get a peak from where you get a long-term consolidation. This is also a seasonal effect because usually we do see gold prices peaking sometime around here, September, October, and they're often dull into the year end like December. And then there's usually a pickup between December and March. This is the seasonal cycle for gold. So you have to be prepared for some kind of a pushback or correction in the weeks ahead. But if we take a long-term view, if we try to take a 3-year, 4-year, 5-year kind of view on gold, I think gold is in a long-term bull market, and that is definitely not over. But if you're looking at fresh accumulation, then you might get better prices at the bottom end. The last part is investors always have to think between equity and gold. So there are phases when gold will appear to outperform equities, and then there's a phase where equities will outperform gold. Now we've seen significant outperformance of gold relative to equities, so it might be time to really increase weightage on equities relative to gold, and that's another thing to seriously consider.
All right, increase weightage on equity with respect to gold. Well, thank you so much, Rohit. Always a pleasure having you here with us on News 9. Always a pleasure. Thanks.
Pleasure. Thank you.
Moving on to other stories that we're tracking for you. US President Donald Trump indicates fresh sanctions coming for Russia. Now, speaking outside the White House on Sunday, Trump confirmed he is prepared to escalate sanctions over the ongoing war in Ukraine. Now, his comments came days after he defended his earlier actions against Moscow, citing heavy tariffs he imposed last month on Indian exports to the US over Russian oil imports. The administration doubled the levy to 50% on India effective August 27th. Now, Trump also hinted there could be more to come, what he called Phase 2 and Phase 3 of the sanctions, indicating Washington may not be done escalating measures on Moscow just as yet. Listen in.
Are you ready to move to the second phase of sanctions against Russia or punishing Putin? Are you ready to move to the second phase of sanctions against Russia or punishing Putin?
US President Donald Trump also said on Sunday that European leaders will travel to Washington early this week to discuss ways to end the Russia-Ukraine war. Speaking to reporters after attending the US Open in New York, Trump confirmed he will also be holding a call with Russian President Vladimir Putin soon. The US leader said he was not happy about the current situation after a massive Russian strike set Kyiv's main government building on fire overnight. Listen in.
Nobody was tougher in Russia than me. That has to do with the pipeline, as you know, Nord Stream 2 and lots of other things. But I'm not happy. I'm not happy. I'm not happy about the whole situation. You know, certain European leaders are coming over to our country on Monday or Tuesday, and individually. And I think we're going to get that settled. I think we're going to get it settled. We have to. You can't lose. When they're losing 5,000 to 7,000 soldiers a week for no reason, you have to get it settled.
Meanwhile, India and Israel are set to strengthen economic ties as the two countries prepare to sign a bilateral investment treaty during the visit of Finance Minister of Israel, Bezalel Smotrich, this week. Now, the move is seen as laying the groundwork for a future trade agreement aimed at boosting bilateral trade. Smotrich will be in India from today, that is September 8th, until September 10th, meeting key leaders, including India's Finance Minister Nirmala Sitharaman, Commerce and Industry Minister Piyush Goyal, as well as Haryana's Urban Affairs Minister Manohar Lal Khattar. His itinerary will also take him to Mumbai as well as Gandhinagar. Now, the bilateral investment treaty, finalized after extensive negotiations, provides protections for Israeli investors in India and Indian investors in Israel. It assures minimum standards of treatment, non-discrimination, safeguards against expropriation, transparency in transactions, and independent arbitration for dispute resolution. The treaty is expected to increase investor confidence and pave the way for enhanced bilateral investments. In addition to bilateral growth, India and Israel are exploring joint initiatives in multilateral development bank-backed projects, especially in the global south, reflecting a shared commitment to innovation, financial cooperation, and strategic economic partnership. And Indians looking to study, work or visit the United States are now facing fresh challenges as the US Department of State had issued a new visa directive effective immediately. Non-immigrant visas, including student visas, that's F1, work visas, which is H1B or O1, and visitor visas, which are B1 and B2 categories, must be applied for only from the applicant's country of residence or citizenship. That means if you want to apply for a US visa in any of these categories, you must apply it from India alone. Now, this change affects those who are trying to bypass long interview wait lists in India by applying from countries like Vietnam, Thailand or even Europe. Previously, this flexibility had been allowed during the COVID-19 pandemic to help ease backlogs, but now Indian residents and citizens who had not completed their overseas application will need to reapply from within India. Remember, US visa processing is already under strain, with wait time stretching over a year for short-term visitor visas and limited slots for student visas. The decision comes at a time when securing slots for student visas is particularly competitive, with open slots filling almost immediately. And staying with students looking at going abroad, well, the US is no longer the first choice for Indian students. That's according to the latest Transnational Education Report 2024-25. Applications to American universities are down 13% year on year as Europe, especially Germany, surges ahead. Germany's share of Indian students has jumped from 13% in 2022 to as much as 32.6% this year, with nearly 60,000 students enrolled, more than double in just 5 years. Canada too has slipped, falling from nearly 18% to just over 9%, while rising tuition fees and a weaker rupee are pushing students to look elsewhere. For Indian students, cost is no longer a barrier but an investment. 33% rely on loans and 28% on scholarships. The top pick is mostly for master's degrees, with management and MBA programs seeing the biggest spike. And while the UK remains a strong magnet, Germany is clearly the new hotspot for Indian students abroad. Mr. Mohandas Pai, chairman of RN Capital, joins me this morning to put this trend into perspective. Mr. Pai, good morning. Thank you for your time. Why Germany?
Thank you. Germany, because Germany has got a very strong education system. Indian students are late in discovering Germany, and Germany has education in English too, and they're very strong in STEM. Remember, today STEM dominates the world, and it is STEM that has propelled Germany to a position which is leading. And I think Indian students are going there because the lower cost of education, it is state subsidized, they don't have to pay heavy fees, it is free education for everybody, and they give good education, they give education in English, and there are very good job prospects in Germany, as Germany is grappling with a shortage of talent. So I think Germany is the go-to place, it's very friendly, and I think more and more students are going. It's a good thing. Indian student needs to diversify, not go to third-rate colleges in the US or Canada or elsewhere. There are too many of them going to third-rate colleges in Canada and the US where they will not get good education and they may not get any jobs. So it's better to go to Germany where there are good institutions and I think study there.
All right. But what we saw as a trend when students went to countries like the USA, Canada, as well as UK was that language was not a barrier, sir. English language being well spoken in India and among Indian students, the ease with which they transitioned to those geographies was there for all to see. Now with Germany, does language become a barrier?
No, language doesn't become a barrier. I think most Germans speak good English. And I think they got English-based education. They don't teach in German. They teach in English in most of the universities for a long period of time. And it's good to learn German as a language. It's not very difficult to learn. But please remember, with so many students going, the challenge was not English. The challenge was, for many of the Indian students, the ability to talk in English. Please remember that, okay?
Right, okay.
It's not that everybody who went there, and the huge numbers have been going to the US and Canada, that everybody who went there could speak in German. Right. Remember, there have been a lot of these young students from Punjab who are going there, joining third-rate institutions and doing some funny courses just to immigrate. Remember that, right?
Right, of course.
So I think this reconfiguration is very good. Germany has got higher standards for entry because it is all the higher education is state subsidized and state run, and they will not compromise, unlike in Canada and the US. So what is happening in good? There have been too many Indians going overseas with the dream of getting a job and immigrating. It's getting social stress, they're borrowing money, and they're not going to get good jobs. because there is resistance to foreigners coming in Canada and in the US. And there are not enough jobs going around now because of many economic reasons. So I think going to Germany, getting a good STEM education at a very low cost, and looking at Germany as a destination to get work experience, I think is a very good thing. Europe is a better location right now.
All right, but what about other challenges in Europe, sir? Quickly, if we can touch upon those. The fact, of course, that economy for most European countries, including Germany, is not keeping pace with the global average. In fact, Germany is likely to grow just 0.2% or so this year. And of course, other problems with respect to immigration from West Asia as well as Africa. Are those going to be challenges that Indian students in Germany should be mindful of?
Yes, there are going to be challenges, but remember, you are going to Germany for higher education. You're going to be in the top 20-25% of the population. You are not a half-educated, illegal or legal migrant coming from West Asia, right? You're not that. So I think it's very important to understand that Indian students going there are going to join good universities, get a good education, hopefully, and they will be absorbed by industry. And even in the industry, for many areas, there is a shortage, even though the economy is not growing well because of the fact that they've been hit by lack of cheap fuel from Russia, and by the geopolitical problems with the US in tariffs, etc. They're not grown, but Germany has been aging for a long period of time. There are a lot of job vacancies, and I think it will be much easier for young Indians there. They're in smaller numbers. They're only 60,000. Please remember, in America it's 235,000.
That's right.
Germany, even though Germany is a smaller economy than the US,
that's right.
But I think they will do.
All right, Mr. Mohandas Pai, Chairman, Ardent Capital, thank you so much. As always, pleasure having you here on Earth. And now, before we slip into another short break, let's look at the global stories that we're following for you this Monday morning. US President Donald Trump says EU leaders will travel to Washington this week for Ukraine peace talks after Russian strikes set Kyiv's government building on fire. Russia unleashes its largest overnight air attack since the start of the conflict, striking the Ukrainian capital and killing at least 4 people, including an infant, prompting Donald Trump to warn of second phase sanctions on Moscow. US President Donald Trump signals a deal on Gaza may be near, with Israeli media reporting a new ceasefire plan put forward to Hamas. Trump warns foreign firms to obey US law after Homeland Security detains over 300 South Koreans. Trump insists investments are welcome, but companies must hire and train American workers. US labor market cools further in the month of August as job growth slows sharply and unemployment climbs to a near 4-year high of 4.3%, boosting expectations for a Fed rate cut this month. 8 core members of OPEC Plus, including Saudi Arabia, Russia and allies, announced fresh production hikes even as oil prices languish near the $65 to $70 a barrel. Japanese Prime Minister Shigeru Ishiba resigns under ruling party pressure following a string of election defeats tied to public anger over rising living costs. Mercedes-Benz unveils new electric GLC, touting it as a showcase of the automaker's EV performance even as Europe awaits US auto tariff cuts. Volkswagen takes the wraps off ID.Cross, a small electric SUV, as Europe's largest automaker pushes deeper into affordable EVs ahead of the Munich Auto Show. We'll be back with more stories on the other side of the break.
एसोसिएट स्पॉन्सर डायना प्रीमियम ब्यूटी सोप, पहली झलक करे खूबसूरत।
ब्यूटीफुल
18th सेंचुरी और अभी तक चल रही है।
ज्यादा नहीं चलेगी।
कुछ का
प्रोमिनेंस नहीं,
प्रोमिनेंस।
वाओ, ओरिजिनल।
या स्पेन से लाए थे।
वहीं छोड़ा थे। प्रोमिनेंस नहीं है ना?
प्रोमिनेंस?
मैं कहना चाह रहा था कि प्रोमिनेंस नहीं है।
प्रोमिनेंस मतलब
Prominence windows, इसमें है highest weather resistance और घर को रखे safe from termites, seepage, dust and noise. Prominence for the world you deserve.
तो अपने सोने को काम पे लगाइए, आज ही कॉल कीजिए 1-800-313-1212 पर।
The power of Digi-Alkaline from Nippo Thor.
Breaking news. Major disruption is expected this week.
Yes, disruption confirm. That's me, relax, no scams, just my brand new show, News Caustic with Cyrus.
Welcome back. You're watching News 9. This is Morning Brief at 9. On to stories from around the world. Let's begin first with the United States. US President Donald Trump on Sunday warned foreign companies to follow American law after the arrest of some 300 allegedly illegal South Korean workers at a Hyundai LG battery plant in Georgia. In a Truth Social post, Trump wrote, and I quote, "Your investments are welcome and we encourage you to legally bring your very smart people. What we ask in return is that you hire and train American workers," unquote. The Hyundai raid carried out last Thursday was the largest single-site enforcement action ever by US Homeland Security, with officials saying about 475 workers were detained in total. The arrests are part of President Donald Trump's nationwide anti-immigrant drive, which has disrupted businesses across the country, even as his administration seeks to attract foreign investments.
Now, look, it's a battery factory in that case, as I'm told. And, you know, when they're building batteries, if you don't have people in this country right now that know about batteries, maybe we should help them along and let some people come in and train our people to do, you know, complex things, whether it's battery manufacturing or computer manufacturing or building ships. So we're going to look at that whole situation.
Staying with the US, the job growth slowed sharply in the month of August, with the unemployment rate climbing to a nearly 4-year high of 4.3%. The latest data confirms that labor market conditions are cooling, strengthening expectations that the Federal Reserve will cut interest rates later this month. More details in this report.
U.S. job growth slowed sharply in August, and unemployment hit its highest level in nearly 4 years, likely paving the way for the Federal Reserve to cut interest rates this month. The closely watched jobs report released on Friday by the U.S. Labor Department showed that non-farm payrolls increased by only 22,000 jobs in August. Economists polled by Reuters had forecast payrolls rising by 75,000 positions. Meanwhile, the unemployment rate ticked up to 4.3% last month. And there was at least one key revision. June payrolls declined by 13,000 jobs, the first drop since December of 2020. The last jobs report had said June's payrolls had risen by 14,000. Mark Hamrick is senior economic analyst at Bankrate.
Right now, we're seeing an unemployment rate that's still strong by historical standards, but the level of new hiring is quite dismaying. And the fact that we saw contraction in a recent month, meaning a job loss, really speaks to the anemic showing that the job market is exhibiting as we speak.
All three of Wall Street's main indexes initially rose on the news as softening labor market conditions make a stronger case for the Fed to cut interest rates. But stocks reversed course to tumble into the red by mid-morning as concerns about a slowdown outweighed optimism about potential rate cuts. Friday's jobs report is the first since President Trump fired the commissioner of the Labor Department's Bureau of Labor Statistics, Erica McIntarfer, accusing her, without evidence, of manipulating the employment data after last month's report contained sharp downward revisions to May's and June's job counts. At least 3 other reports this week confirmed the labor market slowdown, including one that showed there were more unemployed people than vacancies in July for the first time since the pandemic.
And finally, 8 key members of the OPEC Plus alliance said on Sunday that they will raise oil production once again, a move analysts view as an attempt to seize a larger share of global crude sales. The so-called V8 group, including Saudi Arabia, Russia, Iraq, the UAE, Kuwait, Kazakhstan, Algeria and Oman, will add as much as 137,000 barrels of oil per day starting next month. Officials also hinted that output could eventually rise by as much as 1.65 million barrels per day. Oil prices remain under pressure, hovering near the $65 to $70 per barrel mark after falling 12% this year on higher supply from outside OPEC Plus and weaker demand linked to US tariffs. And with that, we come to an end of this edition of Morning Brief at 9. News continues right here on News 9, so stay tuned.
Being a chef, it's my priority to deliver taste in a plate with good presentation, unique innovation. You need to explore, you need to experiment.
You observe the people.